Hi all, welcome to Diversified Finance. My name is Lakal. So today we're going to discuss a very important topic, the 10 steps we need to follow before buying a home. So as we know, buying a house is a massive financial decision in our life. We're going to borrow money for 30 years, and then 30 years is a very long time. Lot of things can change. So before buying a house, we need to make sure we done our due diligence and our research and we are ready. So the first point is a deposit. So, say for example, if you're planning to buy a house in 2020, you have to start saving money from 2015 or even 2010. Bigger the down payment, less you borrow. If you borrow less, your repayment will be smaller. So if you have a smaller repayment, it would be easily paid off from your salary. So saving a deposit is very important. Say for example, if you've been saving $1,000 a month, in 12 months you can save 12,000. In 5 years you would probably have $60,000 saved, which is like a decent deposit, like when you buy a house. Or if you are an aggressive saver, you probably be say example you've been saving since 2010. Then you would probably have 100 to 20,000, 100 to 120,000 sitting in your account, which is a pretty good down payment when you buy a house. So point number 2 is the amount that you planning to borrow. So you sit down with your wife and decide, okay, the maximum amount we're going to pay for a house is, say for example, 600,000. And then if you're just planning to put $100,000 down payment, then the maximum amount you're going to borrow is 500,000. I mean, just because your friends bought a house for $1 million, it doesn't mean you have to do the same. So you sit down and decide, okay, whatever happens, the maximum amount we're going to borrow is 500,000, and it has to match your salary. It should be easily payable. The repayments of that mortgage should be easily payable with your salary. So that's really important. And point number 3 is the type of dwelling. It could be a unit, it could be a villa, townhouse, it could be a four bedroom, 2-story house. You have to decide. Like, it depends. Like if you are a young couple, if you don't have any kids, then you can start off with a unit, like a 2-bedroom, 2-bathroom unit. It would be a lot cheaper, to buy a unit rather than buying a 4-bedroom house. It's very important that if this is your first home, you have to make sure it's something small, easily manageable. The debt should be manageable, because if you go for the biggest house in Sydney, that would be the only thing you would do for the next 30 years. Then you might not be able to have any more money to invest or do anything else, because you borrowed max, and then 30 to 40% of your salary will go to that mortgage, and then you might not end up having any kind of savings at the end of the month. So you don't want to do that. So if you start off small, it's easy for you. Then your repayment will be smaller, because you going for a cheaper house within, say, $3 to $500,000 range. But if you're a family, if you have kids, it's a different story. Then you probably need at least 3 to 4 bedrooms. So it really depends on how much you're willing to borrow, and whether your amount that you borrow is easily payable with whether it matches your salary or not. And the suburb, yeah. So you probably wanna live closer to work, or you maybe want to live closer to your siblings, closer to your family, parents, or closer to your friends likewise. So depending on that, you decide which suburb you're gonna live in. And number 5 is check council rates, electricity bill, gas, water likewise. So if you know someone who lives in the area, you can double check with them roughly how much they pay for council rates, electricity and gas and water likewise. Or you can go online and check all these rates. It's easily available. So the point we do this because for a reason. When you go there, when you receive your first bill, you don't want to have any surprises, right? So before you go there, you know how much you would probably pay for electricity, water, council rates, and gas likewise. And number 6 is stamp duty. So this is something you have to pay as well. In New South Wales, I think it's around 30,000 or so. In Victoria it's about 22,000. So those 22, let's say 20 to 30,000 you have to set aside for stamp duty. So when you save for your deposit, you have to make sure you set aside 20 to 30,000 for stamp duty and bank fees and conveyance fees likewise. And number 7 is cheap home loan rate. So you can shop around, like you can talk to a few banks and try to get like the cheapest home loan rate. So the cheaper the rate, you end up paying less interest, so which is really good, and then your repayment will be smaller. So if you pick the best interest rate. And number 8 is home content. Again, when you save your deposit, you have to make sure you set aside maybe $10,000, because when you get into a house, when you buy a house, you move in, and then as soon as you move in, you need a fridge, you need a washing machine, a TV, a sofa, likewise furniture, and likewise. So it's better to set aside like maybe $10,000. So when you get in, you have enough money to spend on your home content. And number 9 is job security. This is something really important as well. If you feel like you're going to lose your job in 3 months or so, and if the company has already told you, okay, in 3 months you're probably going to get redundant, then that's not a good time to get into the housing market, because then there'll be a lot of uncertainty. You might not be able to find a job, or there'll be like a period that you'll be applying for jobs, you might not get it for like say 3 to 6 months or so. So your job security has to be like at a really high level. And at the same time, you need to look at the market trends as well, especially right now because of COVID-19. There's a lot of uncertainty out there. There are people on JobKeeper and job seeker payments. So if you own like JobKeeper payment, it's not really wise to go and borrow money for a house, because JobKeeper might last for another 3 to 6 months or so. But after that, you still have to keep on paying your repayments because you borrow money for 30 years. So if you don't have that kind of a job security, then it's not probably a good time to get in. So you can keep on waiting, and then you can keep on saving money, and make sure you have a bigger down payment. So it's not a bad thing at all. But if you have like a permanent job, if you get like a new permanent job, then if your wife has a permanent job as well, then it could be the right time to get into the housing market. And the point number 10 is, this is something really important as well. Just because you have a deposit, you are ready to buy a house, it doesn't mean like maybe it's the right time for you to get into the housing market. So you can do a bit of research and check this is the right time to get into the housing market, because for example right now there's a lot of uncertainty out there because of COVID-19. Like 600,000 people lost their jobs. They're predicting the unemployment gonna go up in numbers. So when we are in that kind of environment, there's a chance that housing market might go down a bit. The problem is, like, if you put a down payment, say 10% down payment, and the housing market goes down by 10%, you simply lose your deposit. So we don't want to end up in that kind of situation. Yeah, there's a limit that you can research, like no one can predict the future. But as always, you can do a bit of research and make sure this is the right time to get in. If you feel like the housing market might go down by another 20-30%, then you can wait for another 6 to 12 months, which is not a bad thing, because while you wait, you can keep on saving more money and make sure you have a bigger down payment, and then you end up borrowing less money. So it's not a bad thing, to wait and see. You don't need to rush into the housing market just because everyone's buying. You don't need to go there. So you can wait for another 6 to 12 months, keep on saving money, have a bigger down payment, and then borrow less money. And for the next 30 years or for the next 20 years, whenever you're going to pay off your mortgage, it would be easy for you, for not for anyone else. Yeah, so those are the 10 points that I want to talk about. So I really hope this is helpful. If you think if I need to add more points, please do so, and also please like my page and then share it so everybody can get to know about what they should do before buying a home. Until then, I think that's it for today. I'll talk to you in the next video. See ya.